The correct treatment will be to debit our operating expenses in our profit and loss with a 3.2 million. We don't know, is it bank or supplier? Next journal entry, guys, they shouldn't have done anything, therefore you can leave that. And then the third one in terms of our tax. I'm going to reference this 1, 2, and 3. The third one in terms of our tax, they should have added this back to 93333. Okay, guys, they did not mention anything about the fact that we may deduct the internally generated goodwill or may not deduct this for tax purposes. Therefore, if we correct this journal entry, it doesn't matter that we have the 3.2 million included in our accounting profit or loss. Okay, now we are able to include our disclosure. Remember, first step, we need to provide details of the incident, what actually happened, and why is this an error. Now, guys, you know this, you just need to write this down. First step, include a heading. This is your prior period error. And guys, I'm just briefly going to read through this as you can read on your own, and I'm pretty sure that you exactly know what should be included. The error arose due to the fact that during the financial reporting period, 28 February 2017, CDL capitalized costs incurred in respect of internally generated goodwill as an intangible asset, which should have been expensed through profit or loss instead. Comparative figures have been restated accordingly. The effect of the error on the 20.17 comparative figures is as follows. Now we need to identify what is the effect. Now, when you look at our transaction, first, what I normally do is I identify what is the effect on my profit or loss for 20.17, and then what is the effect in my statement of financial position for 20.17. Now, when we look at our profit and loss, the first one that I'm able to identify is that in the first journal, they've debited our intangible asset, and we need to debit our operating expenses, resulting in an increase in our operating expenses of 3.2 million. But when you look at journal entry number 2, they've debited amortization costs, and we now need to reverse this transaction. If we reverse the transaction, we credit our operating expenses, therefore we decrease our operating expenses with a 293,333 amount, and the difference, which is our 2906667, will be the amount that our operating expenses increase with. Then the next line item that will have an effect on our profit and loss relates to our income tax. Now guys, I'm just quickly going to explain this one again. If, for example, we had accounting profit or loss of, let's say, 1 million, we have already deducted the amortization. Now, we did not add this back, and we have calculated tax on that 1 million at 28%. Therefore, we have the 1 million times 28%, and this will be 280,000. Now, they indicate to us that they should have added this back. Therefore, take it out, plus 293,333, and our taxable profit or loss will then be an amount of 1,293,333 times 28%, and this will be 362,133, and the difference will be the 82,133. Therefore, we need to identify that this will result in an increase in our income tax. Therefore, the increase in our operating expenses and the increase in our income tax will have an effect on our profit, and this will result in a decrease in our profit. I've included this to save us some recording time. Increase in our operating expenses of 290667 and an increase in our income tax expense of 82133 result in a net decrease in our profit for the year of 2988800. Now we need to identify what is the effect on our statement of financial position line items. Now the first one that we need to identify is that our intangible assets will decrease with a 3.2 million. If we need to correct this journal entry, we need to reverse this and our intangible assets will decrease. Then we need to identify that our accumulated amortization will decrease. This will be a positive. We need to identify that there will be an increase payable to SARS, and this will be a liability, that increase. Again, I've included this to save us some recording time. Decrease in intangible asset of 3.2 million. Decrease in our accumulated amortization of 293,333. Increase in our income tax payable of 82133, and this results in a net decrease in our equity of 2988800. Therefore, you are able to identify the net decrease in our profit and loss is the same as the net decrease in our equity. And this is your prior period error note. Not that difficult, guys. Main thing, identify what happened, what should have happened, and include the difference.